What are the differences between excesses, deductibles, and retentions? In insurance, a policy excess, a policy deductible, and policy retention are terms used to describe the amount of money that the policyholder is responsible for paying out of pocket before the insurance coverage kicks in. However, they are applied differently. Many even within the insurance industry consider retention, deductible, and excess interchangeable. These concepts are not the same. In this video, we explain the important differences between each of them and how they may affect you when a claim is made under your policy. I'll explain the general differences. Number 1. Excesses. What is insurance policy excess? Insurance policy excess, also known simply as excess, refers to the amount of money that the policyholder agrees to contribute towards a claim before the insurance coverage comes into effect. In other words, it is the portion of a claim that the policyholder is responsible for paying out of pocket. When a policyholder files a claim, the insurance company typically requests the policyholder to pay the excess amount to them before or during claim processing. In some cases, the excess amount may be deducted from the total claim value before reimbursing the remaining costs, up to the policy limits. The purpose of having an excess is to discourage small or frequent claims and to share the risk with the policyholder. Here's an example to illustrate how an insurance policy excess works. Let's say one has a car insurance policy with a policy excess of 50,000 shillings or $500 and you experience a covered loss, such as an accident damage to the car. If the total cost of repairs is 250,000 shillings or $2,500 and you file a claim, the insurance company will demand that you pay the excess amount of 50,000 shillings or $500 directly to them as the claim is being processed, but before the claim is finalized. It's important to note that the excess amount can vary depending on the insurance policy and the specific terms and conditions. Higher excesses may lead to lower insurance premiums, as the policyholder is assuming a larger portion of the risk. It's always advisable to carefully review the insurance policy documentation to understand the details and implications of the excess in your specific insurance coverage. Number 2. Policy deductibles. What is a policy deductible? A policy deductible refers to the specific amount of money that a policyholder must pay out of pocket for covered losses or expenses before the insurance coverage starts to apply. In other words, it is the initial portion of a claim that the policyholder is responsible for before the insurance company begins to contribute. When a policyholder files a claim, the insurance company will subtract the deductible amount from the total claim value. The remaining amount, up to the policy limits, is typically covered by the insurance company. Deductibles are a way of sharing the risk between the policyholder and the insurer. Here's an example to illustrate how a policy deductible works. Let's say you have home insurance with a policy excess of 50,000 shillings or $500 and you experience a covered loss, such as a burst pipe causing water damage to your property. If the total cost of repairs is 250,000 shillings or $2,500 and you file a claim, the insurance company would subtract the excess amount of $500 from the claim. As a result, you would receive 200,000 shillings or $2,000 from the insurance company to cover the remaining repair costs. It's important to note that the deductible amount is typically set when you purchase or renew your insurance policy, and it can vary based on the type of coverage and the specific terms of your policy. Higher deductibles generally lead to lower insurance premiums, as the policyholder assumes a greater share of the risk. When reviewing your insurance policy, it's essential to understand the details of the deductible, including how it applies to different types of losses and whether it is an annual deductible, reset each year, or a per-claim deductible. Your insurance policy documentation will provide specific information on the deductible structure and its impact on your coverage. Number 3. Retentions. What is policy retention? In insurance, policy retention refers to the specific amount of risk or liability that an insured party, policyholder, agrees to retain or assume for themselves before the insurance coverage provided by the insurance company begins. It is the portion of a potential loss or claim that the policyholder is responsible for covering without reimbursement from the insurer. Another way of thinking of retention is that the insured retains or self-insures some of the risks. For example, if a policy limit is 20 million shillings or $200,000 and the retention is 2 million shillings or an equivalent of $20,000, the insured will pay for all claims arising from this policy up to the retention limit of 2 million or $20,000. When this retention limit is reached, the insurance company will come in and settle any other claim amounts that will fall over and above. Retention limits can either be applied to the total claim amounts during the currency of the policy or per claim. Policy retention is commonly found in commercial insurance policies, such as general liability or property insurance, where businesses or organizations accept a certain level of risk in exchange for lower insurance premiums or specific coverage terms. By assuming a portion of the risk, policyholders can have more control over their insurance costs. Here are a few key points about policy retention. 1. Risk assumption. With policy retention, the policyholder agrees to bear a specified amount of loss before the insurance coverage comes into effect. This means that for any claims or losses that fall within the retention amount, the policyholder is responsible for handling them without involving the insurance company. 2. Risk transfer. While policyholders retain a portion of the risk, insurance coverage is still in place for losses or claims that exceed the retention amount. The insurance company provides coverage beyond the retention, up to the policy limits. 3. Cost control. By choosing a higher policy retention, policyholders can reduce their insurance premiums since they are taking on more of the risk themselves. This can be advantageous for businesses that have the financial capacity to handle smaller losses or claims. It's important to note that policy retention is different from a deductible or excess. A deductible is the initial amount paid by the policyholder for each claim, while a retention is the total amount of risk the policyholder agrees to assume for themselves. The specific details of policy retention, including the amount and how it applies, will be outlined in the insurance policy documentation. It's crucial for policyholders to carefully review and understand these details to ensure they have a clear understanding of their responsibilities and the extent of coverage provided by their insurance policy. Benefits of having a policy retention. There are several reasons why retention may be beneficial to both the insured and the insurer. First, a retention hedges the insurer's exposure to moral hazards, i.e., the phenomenon that an insured will take more risks than it otherwise would have done because it knows that the insurer will cover the loss if the risk eventuates. Secondly, retention enables an insured to obtain insurance at a cheaper premium than it otherwise would be able to. As the amount of retention goes up, the level of risk to the insurer goes down and consequently the premium is also reduced. Thirdly, it sets a threshold minimum amount for the insurer and insured before a potentially expensive claims process is initiated. Low-value claims are effectively dealt with by the insured, and the insured incurs defense costs and damages resultant of same under the retention. Conclusion. Whereas excess, deductible, and retention all refer to the amount of money that the policyholder is responsible for paying out of pocket before the insurance coverage kicks in, there are subtle differences that can only be noted during the application of each. For example, a policy excess, by design, is usually an amount paid by the policyholder to the insurance during a claim processing period, and a claim cannot be concluded before its payment. Deductible, as the name suggests, the amount of the deductible is deducted from the amount the insurer is to pay at the end of the claim. Retention is basically self-insurance practice where a policyholder, fully aware of the implications, decides to retain the risk of absorbing the cost of repair, replacement, or indemnity, but up to a certain limit. When the limit is exhausted, the additional claims are to be borne by the insurance company. Another difference is that excesses do not erode or reduce the sum insured or the limit of liability, thereby does not reduce the maximum claim amount in a policy. On the other hand, and unless specifically negotiated, the application of deductibles and retention reduce the insured amount. Thank you for watching. Remember to subscribe to our channel and hit the notification bell to stay updated on upcoming episodes and valuable content. We look forward to seeing you soon.